Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London UK feed wheat. Hello and welcome. Now, before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on my charts. This was my own original work, as I think you deserve to have that. So with that, Paris milling wheat. The key pattern here it's unlike the American markets. The key pattern here has been and still is the purple highlighted mid-March to mid-May shallowly bearish shift pitchfork, with the market right just over the purple middle time, well, just below it actually at the moment. That's currently at 193.5. This bearish shift pitchfork continues to be an excellent indicator of the market's overall bearishness, though we also seem to be in between the support from the March 2021 low at 191.75 down to the congestion at 187.25 and the resistance from the July 2021 low at 197.25. Up to, I suppose, the declining mauve medium moving average, which is currently 197.5. Now, looking below the September lows, the market has, as I said 8 weeks ago, and I quote, "We don't seem to have anything that significant as support until the August 2020 low at the 176.25 area." End of quote. Whilst above the mauve medium moving average, we might have clear territory until the lows of late June and early July in the 204 area, as well as where the purple upper time sits right now, which is currently at 205. Minneapolis wheat. The market seems to be held to the sway of two, possibly three features. The first is the bright red May to July head and shoulders top. It's currently at 573. This neckline had not acted as a cap but more as an attractor and has definitely been pressuring prices lower. Adjacent to this and running shotgun has been the green short medium moving average, which is currently at 578, which has been a bearish pressure until this week. Now, part of me can't decide if it has been the green short medium moving average or the bright red neckline that was leaning the market lower, but I guess we will soon see, as they now have started to separate. Further below, we have the dark blue September 2019 to date uptrend, currently at 567. This one has been realigned so many times, but it finally seems to have found its groove here. There is no real double bottom pattern here as we've seen elsewhere, but that doesn't mean we will not be immune to the results of any such patterns elsewhere. So just please be aware of that. However, there is a larger pattern which I would draw your attention to once again. I spoke about this 11 weeks ago and ever since when I said, and I quote, "We're also possibly on the threshold of a really big pattern, a December 2024 to date, it's a possible cat's ears pattern. This is a bearish pattern, but the discussion for this, which I have postponed for a couple of weeks, may be coming up and real soon, as we are about to trigger the downside opportunities for such a pattern. It's a long-term pattern, but I urge you to keep remembering this idea, as if we travel and stabilize a little lower than where we are, I may feel obliged to deploy it along with all its ramifications." End of quote. I still stand by this, and I've watched the developments around the gapping action in September and late October's and early November's moves once more towards the lows of September with great interest. We are still relatively close to triggering this pattern, and this is where the two other factors may play a crucial role. First is the declining mauve medium moving average, currently 590.25, which is about to impact the market. This doesn't have pedigree in pressing the market lower, but is still nevertheless there. Second is just above, and it does have pedigree, and it's the purple July 23 to date downtrend, currently at 598.75. This impacted the market back in late June and again in early July, and capped the market with a head and shoulders top back then, so watch out. I suspect that will be the one that will be key on any attempts higher. London UK feed wheat. Okay, so there had been on this daily chart until early July, and running for about a year. One major significant pattern here, a pattern that we have not seen in the other grain markets. I still have this on my daily chart for a reason, and the pattern is the bright red late May to early July 2024 bearish shift pitchfork. In early July, due to changeover, we had a very large gapping move higher, up and out of this pattern, beyond the bright red upper time. That's currently at 159.90. Please remember this level, and also the idea of the bright red upper tines that will show up again shortly. Now, added to this upper time, we had higher up the important, even today, the 50% absolute Fibonacci line at 180.5. And you had there, and even now still have, an area overhead that is a significant resistance, as it capped the market on its rise back in July with some added nearby help at the time from the purple July 23 to date downtrend, which is currently at 177.95. Since that peak, we've seen prices ease lower, moving eventually below all the moving averages and penetrating, but not really or consistently pushing below the bright red broken upper time, seemingly happy to slide along the top side of this bright red upper time even now. What is more important is that we are establishing the market below the very, very important dark blue neckline extension, currently at 168.45, to a pair of very long-term patterns, which I will detail now. Now, I also drew some weeks ago a new late January to mid-July bearish Andrews picture, which hopefully show the new bearish angle of attack. This pattern was not a perfect fit, such that 4 weeks ago I said, and I quote, "I'm not fully sure about this pitchfork, and I may finesse this to a shallower bearish shift pitchfork for the same move at a later date," end of quote. Well, that is what I have done today, and you can see it in bright green on my daily chart. The market's some midway between the bright green upper time above, currently at 177.55, and the bright green middle time below, currently at 154.95. As you can see, it's quite shallow and wide. This all leads me to my final points, the same points I've been discussing for months now, and some of them were something that I noted back in my annual commentary back in January this year on London feed wheat. To see these, it's best if we switch to my longer term monthly charts. Firstly, I saw back then the potential for a very large May 2023 to date cat's ears pattern. This is a bearish pattern akin to a double top formed after a big fall, such as the fall we had earlier in 2023, as well as an even longer term second pattern, an August 2020 to date very large head and shoulders top pattern. These two super long term patterns both rely on one single feature, and that is their common neckline, highlighted in purple here on my monthly chart, currently at 168.45, the same as on the daily chart I just spoke about. Thus, a primary target X3 for the bearish cat's ears pattern will be down in the 127.5 zone, just below the bright red and big old 2005 to date uptrend, currently at 132.45. A secondary harder to reach target X4 will be down in the 112.85 zone, around where the shallow dark blue lower trend line is currently at 114.25. For the 2007 to 2022 expanding wedge pattern, for the head and shoulders top, we would have an even lower primary target X5 down in the 64.20 zone, close to where sits the oldest uptrend I have on any of my 200 or so charts, and it's the 1975, yes, a half century old uptrend. 1975 today uptrend, currently at 66 even. I'm not even going to give you my secondary harder to achieve target for this pattern is below zero. Please bear in mind that these are very long-term targets, stretching possibly over many years, but they are still targets below for these patterns above. Now, that all being said, July with changeover through a major spanner in the works for such longer-term patterns. The reactionary immediate countering monthly key reversal up for July went back above the purple neckline, but stopped at the 50% absolute Fibonacci line at 180.5 and just under the bright green 2023 to date upper bear channel line. It's currently at 178.65. The question is posed is a longer term question, and is whether this was just a reactionary single month move higher or the beginning of something else. Once again, as in my previous commentaries, I will continue to stick to the reactionary single month move higher. But I am prepared to start looking at the possibility of a new base of support, not only being built, but also being exploited for a possible move higher. There's one caveat to this basing higher idea. There's one I've already mentioned, and that's the bright green mid-23 to date Big Bear channel, currently at 130.60 to 178.65. Even with such a big reactionary move back up, we are still sitting within this big bear channel, and it does have the advantage of already having had at least the minimum 5 touches necessary to legitimize it. For all this discussion, we are still dealing here with some very, very long-term patterns, and you should please bear that in mind. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.